All right, now can we here? I will take a big step back. I apologize. Thank you guys for mentioning that. So let me just start over like I haven't been talking for a while now. Good afternoon, everybody. Thank you for joining me here today. My name is Allison Ostrander. For those of you who don't know, I am the Director of Risk Tolerance here at Simpler Trading, as well as an options specialist. So you'll find me oftentimes in the main room or trading room, putting on some option trades and always focused on keeping a low capital risk per trade, as well as being mindful of that in my overall account, which is something I stress quite heavily. So it looks like we're good to go now. So let me go ahead and get back started with SPX, right? This is the main index I'm going to focus on today overall as we kind of talk about what's happened in the market, the sell-off that occurred, and then of course going into what's going to happen shorter term within the next week potentially, as well as what could happen further on in like the next month or few months from here. So overall, as many of you guys know and experienced, we were in a very strong bullish trend to the upside. We saw a strong move higher and got into all-time highs going into late February. Then we started to sell off. Now, the catalyst and started that sell-off happened to be the whole situation with oil when they first couldn't end up striking some sort of OPEC deal. And in turn, that sell-off started to spark the market also selling off. From there, the whole coronavirus situation continued to weigh into the market as global economy started to quickly see a shutdown and stay-at-home orders in place to try and help deter the numbers from going up and the deaths from going up. And in turn, that's kind of halted many sides of the economy, including travel, food and leisure, going out. And so all of that, all small businesses, things like that, are really getting a hit. And in turn, that too weighed on the economy here. So we saw a big downturn for about a month. It ends up being overall the strongest monthly range that we have ever seen in the last 20 years. And we'll go over that here in a second on the longer time frame. But it seems like we finally started to find a bottom. That ended up being a monthly support that we tested, and it held quite nicely. And we've started to bounce back up. So far, it's looked like a slightly V-shaped recovery. We have been taking a bit of breather here for the next week, and I think that's pretty important to note. Overall, this has been roughly a 50% retracement of this move from our highs down to a lows, maybe a little bit shy of it. But you can see we've had a healthy recovery so far. And there are a few longer term levels that we're running into that we'll talk about that are acting as resistance right now. But I think it's important to note here that we're taking a pause because the market's trying to decide, kind of reset some of its indicators and determine, okay, are we going to be able to break above this resistance and continue in what appears to be right now a potential V-shaped recovery? Or are we going to pause here before turning back down and meeting new lows? And I'm very cautious about that being the case because though we know that we're already starting to look at economy starting to open back up, which is certainly a good thing to hear, a lot of people's jobs were put on hold. A lot of people ended up having to go into unemployment. And it's hard to say whether or not they're going to immediately bounce back like we know everyone is hopeful to see, right? An immediate bounce back, people going back into spending. But overall, I think there is going to be some slight cuts. When we think about it, you know, it's not like I'm going to all of a sudden make up for all the movies I missed going out during the last month and a half or so, right? I'm not going to go try and get as many haircuts as possible and cram it in from that time that was missed out, right? So there is a chunk of money that is going to be lost, and it's not necessarily going to be made up either. So we need to be cautious about that going forward. And I think that's what we're seeing here in the market on a more technical standpoint. The other reason why this could be occurring is we are starting to get into the end of April. And as some of you traders know out there, you've probably heard that there's the hell sell in May and go away, right? Where a lot of industrial traders will end up selling out their profitable trades, right? Locking those profits for the start of the year and end up taking early vacations, going off somewhere else. And so when we have that seasonality kind of mindset in place, doesn't mean it always happens, but we do need to be mindful of it, and especially when we're pairing it with potential resistance levels that we're starting to test. So on a shorter time frame right now, when we focus on the daily chart here, what we're basically seeing, Sorry, guys. There we go. What we're basically seeing here is an overall consolidation. We have the 10 period simple trading in between the 130 period simple here. We have the price having broken the ATR trailing stop, which is this dotted red line here, and turning it into the dotted blue line, which is support. Bollinger Bands are opening up. Bollinger Bands within that second deviation Bollinger Band is where the price typically likes to trade in, right? That's its comfort zone, if you will. So when it starts to trade outside that level, we end up having what's called a Bollinger Band snap. And typically you don't see the price outside of that level for very long. And there's certainly some other things that go to that. But what we want to focus on here in particular right now is that we're not in a Bollinger Band snap, but because the Bollinger Band likes to keep the price within its quote unquote comfort zone, right? Within that second deviation Bollinger Band, it will start to ebb and flow to make way for where it thinks the price is potentially going to go. And in this case, the Bollinger Bands are starting to open up as we trade near that upper Bollinger Band, right? So there's a good possibility that the price is going to continue higher and the Bollinger Bands are making room for it. So that is one thing to note. Now, right now, going into the close today, we actually went right by that 2880 level. For those of you who are members in our main room over at Simpler Trading, you know that that's kind of a resistance level I talked about today. It was the prior highs that we made last week, and it would be a good clue if we started to break above that. If we started to break above 2900, then we were probably going up to 3000 and going up to test this 100 period daily simple moving average on the daily chart, right? So there is a good probability if we start to break those levels, we'll move up probably another 100 and go up and test resistance. However, if we keep stalling around 2880, which we'll see here in a second is a weekly resistance level, that could be a sign that if we do end up into the end of this week starting to potentially sell off, or into next week we start to see a sell-off, it might be the start of that resistance holding and a drop back down to test some of our lows. The first one I'd be looking for on a daily chart to test is right here around 2660, 2650. That's the ATR trailing stop as support, as well as the 30 period simple moving average. A few signs that we are still in consolidation. The compound breakout tool here is giving us choppy back-to-back signals. Whenever you see that occur, that's a sign that the price is overall being choppy or consolidating within a range, which is what we're getting here. Momentum has seen a nice move up, but we are starting to trade near the top of the axis. So that too could be a sign of exhaustion. The move up matches in line with the move up that we've seen in the price in this retracement so far. But if we're already starting to get to levels of exhaustion here, right, and we're only halfway up from these lows that we had, that could be another sign that we're potentially going to go back down and test them. So on the weekly chart, certainly what I'm watching going into the close of this week is notice how we are right back at the 100 period simple moving average. We broke below that level back here, and the last few weeks we've been going up to test it, but have not been able to break above it. So the fact that we're still holding that as resistance is also a sign to pause. It doesn't mean we can't break above it, right? If we do, on the weekly chart, the first support level, or excuse me, the next resistance level I like is around 3035, followed by 3200 up here with the ATR trailing stop. Closer to 3250 actually. So we have some resistance levels still above us that we'd have to get back into before technically being back in a bullish trend on the weekly time frame. But right now we're at that first strong level of resistance, the 100 period simple. And so the question is, will we be able to break above this, or will it continue to hold? Certainly momentum, though it has seen a nice pullback from these exhaustion levels on the bearish side of things, it's still trading below the zero line. So there's still a lot of weakness here. The fact that it's pulled back some actually now gives it room to move back to the downside, especially if we start to see a red bar form for the week. So that's what we need to be cautious of there. We also have a pullback signal occurring on the compound breakout tool that actually printed a few weeks ago. And I think it might have already satisfied itself here with the 100 period simple. Now, if we start to break above that, and this remains valid, then that's a good sign we're going up to the next resistance of the 30. You might be able to catch another bullish trade to the upside there. But first, we need to break and hold above the 100 period simple, and we have just not been able to do that. Now, maybe this is the week we do it, right? Today was only Monday, so we still have Tuesday, Wednesday, Thursday, and Friday of trading to see if we can break above it. But we are stalling there right now, so it certainly makes me cautious. And I'd also like to see how we go into the close of the week. So maybe during the week we trade above it, but then at the close of the week we still hold that level. And if that's the case, that is certainly going to be more of a bearish sign that we're moving back to the downside, or at least back down to support levels to test them. On a monthly, on a very longer term time frame, this is what makes me cautious about whether or not this resistance. Not only do we see it on the weekly chart with the 100 period simple, but we broke the ATR trailing stop on the monthly time frame, and this to me in particular is a pretty bearish signal. The reason why is the last 2 times that we did it on a monthly time frame within 20 years was back during the dot-com bubble going into the early 2000s and back during 2008 in housing recession. Both times we broke support and turned it into resistance. We went into a bearish trend for about another year. So that could be what's occurring here. Now, the reason why I'm hesitant to say that, right, that I'm not fully bearish on my account right now, is because notice the monthly range. We kind of talked about this. The monthly range is wider than it has ever been on the last 20 years, right? This is the most volatility we've ever seen within a month of trading on the SPX. And so when we kind of look at how strong this move was to the downside, we went right down to that 100 period simple, tested as support, held, and then actually even bounced back up. The bounce was so strong back to the upside that we didn't see the Bollinger Band start to strongly flare open anymore. They're actually kind of going back into slight consolidation as of right now. They're still kind of opening up, so still want to be cautious there. But it's already holding quite nicely overall. When we look back at these moves here, it feels like what happened in about a year on these downturns happened within about a month for us. So maybe it is that V-shaped recovery people are talking about, right? We've seen so much volatility that I won't discount anything out of the market. However, right, what gives me pause still is the fact that the 30 period simple moving average is still right around that 2880 level to actually right around 2850 or so, 2830, and it too is acting as a slight resistance. So once again, not only are we getting into the end of the week, but we're also getting into the end of the month. If we go into the last trading day of the month and end up holding this monthly level as well as resistance, if we close back down closer to 2800, then that's going to be another sign of pause, especially if we start to see ourselves sell off into May. So that's what I'm cautious of right now. It doesn't mean that we'll see it, right? Certainly if we hold above this level, to me that's a good sign we're going up into 2900 and then potentially 3000 and testing those daily and potentially weekly support levels from there. Or excuse me, those daily and weekly resistance levels ahead of us from there. And keep in mind the monthly time frame right now, even with this strong sell-off, is still technically in a bullish trend, right? We still have the 10 period simple above the 30. Both are above the 100, so we're still overall bullish here. And momentum right now, even though it still is resetting, is still technically above the 0 line. So we still have bullish sentiment here too. Depending on how we close for the month, we'll either keep this bearish pullback signal to test support levels, or it will have already satisfied itself from this move down here, right? It was valid the 2 months ago. It followed through and tested support last month. And so if it cancels out, that means the signal satisfied itself, and now we're going back into either a consolidating signal or a potentially bullish signal, which in turn, of course, would match the trend. So those are the things that I am keeping an eye on overall here when it comes to SPX, both going into the end of this week as a shorter time frame, right off the daily and weekly chart, and also because it's the end of April going into May. And what we know, seasonality can sometimes happen in May as well. So that's what I'll be watching. I definitely think we're taking a bit of a breather here. And, you know, even though I think things will be hard economically, there's certainly a lot of things that the Feds are doing and that we're trying to do to keep it a bit more afloat, to keep the market a bit more euphoric, and potentially see that bounce and that recovery happen a bit more quickly than maybe some traders and economists were first anticipating. So thank you so much for joining me on this market update. In regards to trade ideas that I would look at, going into potentially the end of this month and what occurs in May, there are a few different ways that you can trade it. So let me go ahead and pull up Think or Swim here. So if you're uncertain what's going to happen and you kind of want to have a hedge in either direction, I think a great strategy that you might be able to consider going into the May monthly expiration is a straddle butterfly. So let's go ahead and talk about that. Here is the May monthly. Now keep in mind it is SPX, so personally I would stick with the monthly expiration, but I would do it for the weekly contracts. That way you can actually trade it going into Friday's trading day and do it like that. Let's technically look at 300 strikes. So what I would be looking at here is very wide wing butterflies, both on the put and on the call side to play for a potential reversal, as well as a move up to test resistance. So on the put side, my first target would be anywhere around 2650. I would say down to 2400. The reason why those levels in the next month, first of all, that is right around the first support level that we see on the daily chart. And as you can see from our initial move to the upside, when we retested, the support level that we held here was right around 2440, close to that 2400 level. So the trade I'd probably be looking at would be a pin around 2550, right in between those two levels there. So let's go up to that 2550 area. And we'll put on a butterfly, and then we'll change the strikes, of course. So 2550 is what I'd be looking at for a pin. And I'd price this out as 100 with spread. So 2450 on one side and 2650 on the other. And the reason why I would do that here is because you can see it's overall still expensive for the weekly expiration. It's about a $4 cost basis. So it leaves for an excellent profit potential off of $100, right? It's about a $96 profit potential here. So not a bad risk versus reward. And if we do start to sell off, the reason why I want to kind of encompass it a bit to the downside is, let's say we see a move down and we stall here. Well, having an 100 point width spread going into the May monthly should still allow for some sort of profit to the downside, even if we go down and hold this as a support level, because we'll be right by one of our wings. So it's likely that if we see that hold as support, we can still close out of the put butterfly and take a profit, even though it never technically went into one of the wings, because right now we're looking at it so far out of the money. The other reason why I put it to the downside is because if we do start to sell off, we know the volatility that can pick up in these sell-offs, right? We've seen that firsthand just earlier this year. So if that started to occur a lot more quickly, I also kind of want to have a bit of that buffer zone and protection and allow a move to the downside and have some support and resistance levels we could test, which is why we looked at the support right around 2450, and we knew if the price did really start to sell off, this could be another level where it potentially pauses at, right? In turn, still trying to keep the price within our butterfly and hopefully allow for a nice profit that way. At the same time, though, let's say it goes to the upside, right? So we want to be prepared for that as well. In that case, the first real level that I'm looking at as a potential resistance is 2300. I still want to be cautious of 2900 because it's a psychological level, but we're very close to trading that. So right around 3000 would be the first. When we take a look at the weekly time frame, we know 3030 is going to be a potential resistance level up to around 3250. So because of that, let me go back here. There we go. I would want to be mindful of that. And that the first level that we could go to is around 3000. So if we keep it 100 point width butterfly, right, and start with 3000 as one of the wings, excuse me, then 3100 would be our pin. So let's look at the call side here now. So 3,000 is our first wing, 3,100 followed by 3,200. Now, our next weekly resistance level is slightly above this at 3,250, right? So it does leave a little bit more uncertainty to the upside. But the reason why I'm okay with that is because even though we have seen some nice moves to the upside, it hasn't been as strong as a move up as it was down, right? This almost just completely was like a water slide at a theme park, right? It was just to the downside. Here, we're taking more steps, right? We're seeing mini pullbacks, not as much of a daily range. And so because of that, it's less likely that we're going to all of a sudden get a volatile spike in the market to the upside. Doesn't mean it can't happen, right? We're still giving ourselves a wide range here, but that's why I'm keeping this one a little bit closer to at the money compared to the put side. So the cost basis in this is around 1070. So you can see it's already increased that much in value, right? And compared to the $4 cost basis, it's about 1070, almost $11. When we combine those two cost bases, it means that we have about a 1470, so basically a $15 trade here, right? And if you do it on one contract, that's about a $1,500 risk for your account. Now, it seems a little heavy, but keep in mind, this is a 100-point width spread. So we basically have a $85 profit potential on either side. So that's the trade I'm looking for. Now, keep in mind, to keep your risk controlled, you need to have both butterflies be the same width, right? Keep it a standard butterfly where each side of it is the same width apart from the middle. And then also on the call side, keep that the same width on the put side. So we looked at a 100-point butterfly on the put side. We're keeping it a 100-point butterfly on the call side. This keeps our risk overall lower and leaves us the same profit potential in either direction. Now, the benefit here is SPX needs to move, right? If we move up, we're looking at taking some profits if we go into the wings of our butterfly and test resistance levels, or at least get close, right, to those resistance levels would probably allow us some sort of profit. If we move down, same thing. If we go to the wings of our butterfly, then we're looking at decent profits. The con here, right, the way that we incur this full loss of $15 is if we either strongly see a move to the upside and exceed 3,200 and we took no profits prior to that, which I find hard to believe. I feel like we would have been able to take a profit at that point, but let's say just skyrockets to the upside and we blow past 3,200 very strongly, well then that's how we could infer a full loss on the trade. Or vice versa, if we completely go past 2450 to the downside and we just take a tumble, right, and it really sells off, that's a little bit more likely just because of how the volatility we know can pick up. So if that were to occur, then it could be a full loss. Or, right, if we don't see any movement, let's say we actually just remain in consolidation in May, right, it's not really a sell-off, but it's not really a strong move up. Well, if we can't get up to 3,000 or can't get down to 2,650, then that too could allow for a loss in this trade. So that is your risk on this trade if you decide to take it. It's kind of a hedge trade, but it's a hedge trade in both directions, right? So you're taking a hedge to the downside, you're taking one to the upside. If you wanted to control your capital risk, you could look to narrow this spread, maybe look for a smaller cost basis, but keep in mind, if you narrow the spread here, you need to take into account the entire net debit on the trade, meaning the net debit on the put butterfly and the net debit on the call butterfly, and understand that on the call side of the spread, right, if the market price moves up, the call side of this trade is going to hold less profit potential because you've narrowed the spread more, whereas the put side will hold more profit potential. So you just need to understand what that might look like. For myself, to keep that math easy and simple, I like keeping in the same spread width. That way I know I have an even profit potential on either side. And in this case, I'm giving the price plenty of range to move and still potentially allow for that profit to occur. So thank you so much for joining me, guys. Sorry for that slight hiccup in the start with the mic being off. I hope you guys have a wonderful rest of your day. For my futures traders out there, have a great rest of your trading day if you decide to trade this evening. And as always, may the trade be with you. And I look forward to hopefully speaking to some of y'all in the main room tomorrow. Have a great one, guys. Bye.